Welcome to the show, folks. Jason Bible and Robert Orfino, Texas Real Estate Radio Network. Well, you guys were in Disney. We had our first broadcast and our first guest in studio.
Almost saw it. I saw a picture of it. I couldn't get the live feed.
Okay, so we were hanging out here, having a good time with Sean Riley at Capital Concepts. So I had this idea this weekend. I was like, you know what? I'm just going to put this out there on Facebook because I think it's totally true. I looked at a bunch of numbers on our market update from Friday, and basically houses below $150,000. Let's start there.
Rapidly disappearing.
But why that number? So houses below 150 grand make for great rentals.
Sure.
They're great Airbnb. They're really good houses to have. $150,000 and below. They make up less than 5% of the marketplace now. 54% of them sell in 7 days or less.
That's amazing.
So I started doing just some quick math, and if you are not in real estate in Houston, Texas by 2021, don't bother. Like, this market's then not for you. It's over. Now, does that mean you're not going to find any deals? That's not true.
No, but there'll be other strategies you'll have to move on to. But the low-hanging fruit, the 150, 100,000 and below, they're gone.
They're gone.
Yep.
The level of difficulty past 2021 gets ratcheted up to a whole nother level.
Yep.
So if you think you can't find deals now, just wait. Like, it's about to get brutally hard.
Yes.
In fact, if you look at a number of the wholesalers and flippers in town have been eviscerated over the last 2 years.
Yeah.
Where there were companies doing 100 deals a year, they might be doing 30.
Not a lot of them out there. Yep.
Not a lot, and there's not a lot of guys left. So in looking at the numbers for you landlords out there, rents are almost flat.
They're lagging.
And my prediction for this year was we'd see a bump in rents. Last year, 2019, they were relatively flat. This year, I think they're flat in part because of Corona.
We can't evict happy people. To get the rent.
Yeah, you're just
raising the rent, right?
You can't raise rents because you don't want tenants not to pay because you can't evict them. It turns into a total nightmare.
Yes.
So
but that's going to come back in 2021 with a vengeance.
It's
right?
going to come back hard.
Everyone's going up.
Everybody's going up
because everyone's going to be out, and you're going to have some products that there are just not a lot of them out there.
Mm-hmm. So what happens? This is very interesting, and we talked about taxes a couple of times. People think that, well, tax rates go up, then my rents go up. That's not how the real world works. But what's going to happen is, as properties continue to appreciate, landlords are going to be selling. They're going to be liquidating those properties because appreciation, which is taxes and insurance, are outstripping increases in rent.
Yes.
So there's going to be fewer houses available for rent, which will eventually bring prices back up. But I think you've got a real problem here. If you're a real estate investor or you're thinking about expanding your portfolio or you are considering getting into single-family real estate in Houston and Dallas, if you're not in by 2021, it's over. Like, it's just the houses are going to be so expensive. Rents are not going to keep pace with appreciation, and you're going to be out of this marketplace.
Agreed. And I think what we'll see, the shift will be, I don't think there'll be a lot of flips out there. I think it's going to be the ground-up infill people that find that lot that's already, I only have to go 10 feet to connect to the sewer line and all that stuff. I got to put a lot of that Division 0 work in, and I'm just going to do infills. And if I can build at $100 a square foot, I can throw duplexes or duplexes, right? Because the city of Houston got funky with 4 units, calling them multifamily now. With means you got to do some different things. So, but that duplex will be that strategy for the real estate investor. If you get infill and build a side-by-side duplex, I think that will be a very good strategy for the folks that know what they're doing.
Now, what's interesting is you could actually take 2 duplexes on the same lot, call it a 4 unit, still get a Fannie Mae loan. And the city of Houston should treat it like a duplex, right?
Yes, but once you get to, I don't know about that. They're pretty particular
they're separate
now.
Buildings.
Yeah, they might. We had a 4 and a 1, which got us messed up.
But they only required all the fire protection and life safety on the 4, right?
Not
on the way?
Yep.
Okay. So my guess is that might be the strategy going forward.
Suppression system. But it's cheap. It's just one comma wall.
Yeah. Between the two units, right?
Yep.
Yeah. So if you're sitting here trying to figure out, should I do real estate? Should I not? If you're going to be a landlord, let me preface it with that. If you're going to be a landlord in Houston, Texas, you got a year. If that. If you're not in, if you're not in by 2021, you're going to have to go to another marketplace. You go San Antonio. You can do some places around the Hill Country. You can do Corpus.
Right, with the understanding that based on what our criteria is, it's appreciation and cash flow.
Right.
That's why the whole reason I moved from California to Houston was because this was a unique marketplace where I didn't have to pick one or the other.
Right. Yeah.
Right. I got both.
Mm-hmm.
And I think there's probably less than a year left on that. Yep.
So
it's a good call.
It's appreciating so much that, I mean, a good point is if you were to look at what we're doing in our fund, all of our buying will be done by the end of 2021. Like, we will not be buying any more assets, if that. It might have to make it till the end of the year.
Right.
Just because
we just opened up the door again on it because, quite frankly, we found 5 units that are all under $100,000 and need to be bought immediately, right?
Yes.
So there's an opportunity there to get into the fund. It's a crowd fund, and you have to be an accredited investor. For those of you who don't know what accredited investors are, that means you make over $200,000 a year as an individual, or $300,000 a year as a family or household, or have $1 million in assets, not including your personal residence. If that is you, then we have a fund that is doing a 9% preferred return, which is, the last time we'll ever do that, right?
Yeah.
So it's given a lot away when we understand what notes are selling for out there. It's when you look out over the buffet of options that you have. As an accredited investor, we think ours looks pretty good.
Yeah. Now, what's fascinating is with this ramp up of appreciation and all these buyers flooding the marketplace, there's a huge misconception that the buyers are not as financially sound as previous buyers. And actually, that's not true. It's actually harder to get a loan now than it was 6 months ago.
Yes.
So at least my prediction is that's going to continue. So moving forward, what's going to be the play? I think you're going to do some flips, wholesaling maybe. I think the note space is going to be the kind of the place for us to play in for a little while, and then continue to build up our Corpus portfolio, because I just don't see Houston past 2021. It's going to be so expensive, and DFW's in the same boat. So we'll have to go to places like Beaumont. If you're in DFW, you're going to have to go outside of Garland. You're going to have to go to these outlying areas that are really not Houston. You have to go to Orange. So I'm just not seeing, like, if somebody's sitting on the fence, should I get in, should I not? I'm like, if you're not in by 2021. And then the other thing I said in that email was, houses are appreciating so fast that even 3 years from now, if there's a world-ending real estate crisis and you lose 40% of your value, if you bought between now and 2021, you're still going to be positive.
So I was walking through Hollywood Studios, and I caught Nueces County. Was it 23% year over year?
Yeah.
That's phenomenal.
23%. Nueces County, which we started buying in a little over a year ago, is up 23% year over year. So if you have 2 years of growth, and I'd have to sit there and do the compound annual growth rate, but let's call it 20% a year compounded, you're probably at close to, at the end of year 2, you're at 42, 43%. So even if you had a real estate crash of 50% at year 3, you're still ahead in equity. I hope that makes sense to everybody. Yeah. But this whole idea that there's a real estate crash that's going to end the world, I'm like, you got to do the math.
Yep. Hey guys, thanks for joining us. We'll be right back after this commercial break. This is Mr. Texas Real Estate, the Texas Real Estate Radio Network. Excellent. Hey, welcome back. This is the Texas Real Estate Radio Network with Jason Bible and Robert Orfino. That's myself. We're from Mr. Texas Real Estate. If you want to get a hold of us, give us a text at 281-401-9008. You want to figure out what we're working on, you can go check out our website at mrtxre.com. MR is in Mr. TX is in Texas. RE is in realestate.com. So no more $150,000 properties. We're seeing some real mirrors of other markets that appreciated like mad, like Colorado, like Seattle.
That's a good point. This is more of a Colorado than it is a Southern California model.
Definitely more Colorado, because the cap at the top is still going to be – it'll never quite hit West Coast, right? like $1 million house in Colorado is a $600,000 house in L.A.
Yeah.
But it's probably a $500,000.
Yeah.
No, $1 million house in Colorado
No,
is probably a $3 million house in
Yeah.
L.A. Maybe a $500,000 house here. So
Yeah.
the top end of the market still has some leg room, some room to grow there. But the bottom here, the affordable housing, the first-time home buyer situation has become out of control. And so as a landlord, we want to buy everything that's under $150,000 a door. Plain and simple. Before this all happened, our number was $90,000 a door. If we could if we could get a house or apartment or duplex, whatever it is, at $90,000 a door, we're good. Now we're looking at $125,000, $150,000 just to make the mortgages work and the debt service coverage ratio. Again, interest rates are still low. They're relatively low for investors on the non-QM and some of the other Fannie and Freddie products out there. But you're still, and again, we keep telling you that if it's under 7%, you're good to go on those interest rates. If it's under 6, even better. And God, if you're under 5, then that's home.
I think if you're shopping interest rates, you just need to go ahead and stop and get out of real estate.
Yeah.
Because the interest rate doesn't matter. Yeah. When you're appreciating this much, this fast,
doesn't matter.
You just need to get the money back out and working again.
Yes.
I cannot understate. You need to move faster than you did in the last 3 years.
We're talking about the velocity of capital here, your capital, and how fast you can get it out onto the street, refi, pull it back, and do it over and over and over, because you only have about 18 months to do this. And so if you're not trained, if you're not prepared to roll your $50,000 at least twice in 18 months, then you're going to lose out. We crunch numbers. We're just like everyone else. We look at the numbers. We look at the neighborhoods. We go, I don't know. And then we listen to ourselves on the radio, and we're like, hey, you know what? We're going to keep all the 5 of those to ourselves.
Yep.
Nobody bit. We gave an opportunity to walk through. Fine. We're going to keep them all for ourselves.
Keep all 5 of them.
Because we know that $80,000 house that we're selling now is really, truly worth $96,000.
So listen to this. Houses below $150,000. Sales have shrunk 23%. Let me explain what that means. HAR does a really bad job of explaining this.
It means nobody's buying them, Jason.
It means nobody's buying houses below 150 grand.
What are you talking about?
I'll grab Russell, and if there's ever a chance I could sit down with the HAR economist and say, you guys explain this very poorly to the common man, right? So what does it mean when a marketplace has a decrease in sales at a certain number? It's one of two things. Either no one's buying them, or there's not enough to buy. The inventory is too small.
Right.
So your market as a landlord shrunk 23% in the last 12 months.
We should call that market cap, right? The maximum amount of properties in that category has shrunk.
Yes. They should actually give the gross number so you can see this is how much that marketplace is collapsing. Meaning there's every month you're losing 2% of the entire marketplace below 150 grand.
So then if you're a flipper or if you're a builder, you're just going to look at what segment of that market increased.
Right.
What's the top? Where's that sweet spot in there?
Well, I'll tell you.
350, 450?
The market that's grown the most, this blew me away. 82% increase is 750 and above.
So there you go. Go build $1 million homes.
$750,000 and above has increased 82%.
Yep.
And I believe that's in part because houses that were $600,000 are now selling for $750,000.
Right.
So it's pushing, the whole market is just pushing up. And I keep hearing from people like, Jason, you don't understand, it's going to stop someday. I'm like, yeah, it's going to stop in 2028. It's going to stop 2028, 2030.
Yeah.
So if you want to sit around and wait for the next market crash.
I'm not even waiting for it.
Yeah, I'm not waiting. $30 million in property will be done, right? I mean, it's game over at that point. So this whole idea that, there's all of these, look at this. Single-family home sales are up 32% year over year. The average sales price rose 13%, while the median jumped 10%. So one of the things I said on that email is houses 150 grand and below are appreciating nearly double what they are at the median. So they're appreciating nearly 20% a year.
Yeah, and I think what you're going to have here is a boom over the next 12 to 18 months. If you can find a deal, you're going to have a lot of people who are just, not that we recommend it, are going to flip the deal.
Yeah, and that's going to be so stupid.
It's going to be a really, really big time loss of wealth, right?
Well, there were guys right after Harvey, and I bought that property down in Bear Creek. It's one of my favorite little properties. I bought it I'm all in for 110.
Yeah.
Let's just call it what it is. I'm all in for 110. And there were guys that were turning around and flipping those because they could sell them for 150. Mm-hmm. And they're like, "Oh, Jason, I made, net, I made like 20 grand on it." And that house is worth over $200,000 now.
Sure.
So by this time next year, I'll sell it and I'll make 100 grand. They would have had to have flipped 5 of those before taxes.
Yes.
To equal the one rental I did.
Yep.
So one of the things
it's been a profitable rental.
It's actually it's not been that well. When we did some other things to it, it became very profitable. As a rental, it was okay. But and we looked down at Surfside, the same thing.
Yeah.
I said hi to the new neighbors across the street from us. They
nice.
closed on that one.
Nice.
270 something, 272. We bought ours for 220. Do you remember?
208, 209.
208. So let's call it 210.
Yeah.
The identical house across the street just sold for about 270.
Love it.
So that's a 30%.
See, that market will become an LA market. That is scary what we're going to see, because that house will be worth $400,000 before you and I are done here in the next 3 to 5 years.
Yeah.
That'll be a $400,000 to $500,000 house. You can already see people are scraping. They're putting up really big houses because they're getting the numbers, because they appraise. You can get the loan, so let's go do it, right?
Yeah. Bunch of new builds. Saw a bunch of
new builds, yeah.
How do you know the new builds are going in at Surfside? You just see the sticks sticking out of the ground.
Everywhere, yep.
So if you just see those sticks, that means real construction is about to start.
Yep.
Yeah.
I think that is an excellent little market down there, which means it'll bleed over into Freeport and Lake Jackson, so people need to take a look at those markets as an alternative to the Houston market that's drying up.
I like Lake Jackson. That's a good market.
Yeah, I mean, as long as you're not in a flood zone down there, you're okay. I would say it's probably 5 to 10 years ahead of Corpus as far as maturity and governance.
Yeah,
it's a good way to put it, right? Mm-hmm. It's a good way. We're looking at these markets, guys. If you're interested in coming along for the ride here, we do have a mastermind. We really have 2 products you can buy.
Yeah,
you can buy a $25 product, or you can buy a $10,000 product, right? The mastermind's $10,000 for year 1, $7,500 for year 2, $5,000 year 3, $2,500 year 4, free thereafter, because we have a 5-year run here, and we want you to be in it for the long time. So it's not a $25,000 or $30,000 or $60,000 deal. It's $10,000. We want you to come in. We want you to take your capital and start deploying it and getting some properties. And so if you're interested, you can go to our website, mrtxre.com. and look for Mastermind. It's the first tab. And you can sign up right there. If you want to have a conversation, you can text us at 281-401-9008. Just text Mastermind, and we'll get a hold of you. This is Robert and Jason here with the Mr. Texas Real Estate. This is the Texas Real Estate Radio Network, guys. We'll be back.
So yesterday, I had a secret mission. I had to take back the big green egg.
Oh.
So snuck into the backyard, went and grabbed it, threw it in the truck. I had forgotten how heavy that damn thing is. So it is here. It is here. Brian doesn't know this yet, but he's going to get a good sweaty workout before he heads home today.
Break it out.
So we're gonna put it in the back here. I'm probably gonna pick up some. I need to test it out because I hadn't used it in a couple of months.
Yeah.
But,
let's do that tomorrow.
I'll have that out here. I will probably bring the PK. I've had a lot of questions about the portable kitchen, the fine aluminum grill. I may bring that out. If somebody wants hot dogs and hamburgers.
Yeah.
Otherwise, the smoked meat's going to go on the big green egg. But, it'll be an exciting time for our mastermind folks to come and hang out. And mastermind and investors, right? We'll have some investors out here. So.
No, just this Friday, and then every Friday after that, it'll be invitation only for folks that have invested with us.
Okay, perfect. So I see what we're doing. We're going to test out on our mastermind folks, right?
Yeah, see if anyone gets sick.
Yeah, and then we go. Okay, now we can kind of open this up to people we know a little bit.
Yes, and anyone who's got some meat you want to grill on Friday in the mastermind, bring it on down and eat elk or bison or something unique,
something weird.
Yeah, bring it on over.
So, good deal. So we're talking about the disappearance of houses below 150 grand.
Yeah.
I am in full election mode now.
Yeah, me too.
I am watching all this stuff, and I'll tell you what I think is probably one of the most disheartening things I'm seeing right now out there as I get it. People are saying, let's pray for elections, do this or that. And I'm like, that's fine. But claiming
What?
praying for the election and kind of all that
Really?
stuff. And I'm like, all right, that's fine. But I just don't buy the idea that one party is the devil and the other one's not, and vice versa, depending
Render
on.
to Caesar what is Caesar's, right?
That's exactly what it is. So it's fascinating to kind of watch people online that are like, this is the most critical thing going on in their life for the next
Oh, their heads are
15
exploding.
days.
Yeah, it's
Yeah.
amazing. And I love so there's all the unsubstantiated nonsense that comes out, right? Mm-hmm. So Hunter Biden's laptop was found at a repair stop, and this had all this secret intelligence on it.
Yeah.
And I'm like, really?
Yeah. So, what's fascinating about the whole Hunter Biden thing is it's completely legal.
Oh, to do everything you want? Yeah, the guy's had
It's
some trouble in
unethical.
his life. I mean, so he's an easy target. But it's
No,
just
it's
like,
not. It's not the cocaine. It's the oil industry stuff.
Yeah,
It's
you can lobby all that stuff, sure.
that is completely legal.
Yes.
So it's so funny to me is everyone's throwing their hands up in the air, and I just happened to hear something about what was I doing? I was doing something the other day, and somebody had mentioned Paul Ryan. Maybe it was Tim Pool. He had mentioned something about
They were talking about Trump. He went to Wisconsin, and he held a rally, but he had it in Paul Ryan's district, not in the areas where he needs, not in the Milwaukee suburbs.
But somebody had mentioned something about Paul Ryan,
I wonder where he's been.
And somebody said, "Hey, Paul Ryan's over at Fox." I'm like, "What?" So I zipped over to his wiki, and sure enough, he's on the board at Fox.
Oh, nice.
He's on the board, and somehow he's got some ownership position. There's some other things
Speaker
going on.
of the House, why not?
And he's a what do they call it? He's not adjunct faculty, but he's kind of like a guest lecturer at Notre Dame,
yeah.
and he's got some other stuff. And I'm sitting there, and I'm like, I almost posted, I'm like, guys, what's the difference between that and Hunter Biden?
Yeah.
There's really not much difference.
Well, he's a Democrat.
Well, that's exactly what it is. I'm like, it's the same.
Lock him up. I'm like, really? Lock him up? That's the guy you want to lock up? Okay.
I don't get it.
It's, it is hard for a Democrat to split up the rally nonsense
Oh yeah,
to the policy.
yeah,
Because all that you can see if you're on the left is all that red meat rally stuff.
Yeah.
You're like, how could anyone ever consider that? Right. But when you look at the policy, you're like, hey, man, he did have a roaring economy.
yes,
Now, we can talk about timing and Obama laid seed groundwork. But he had a booming economy, right? For sure.
yeah.
He's addressed some foreign policy issues that no one ever wanted to tackle.
That's if you really get to. There were two things for me. One's foreign policy, the other one's the judge stuff. All the other stuff, I never figured Trump would be all that. I figured he might do something for businesses,
Sure.
but he's really not. But the foreign policy stuff, I mean, he took on some of the really
Absolutely.
ugliest stuff that nobody was willing to touch.
Yeah. And then he shows up, he gets off the plane, he starts yelling stuff like, I have a cure for COVID. It's like, you moron. Just stop this. Like I told you, it was almost a month ago, he did an ABC town hall. And not the last one with the craziness over there. The ABC town hall, I was like, dang, can I just get this guy?
Yeah.
If I got that guy 75% of the time, man, I'd have my flags on my truck, man.
He'd be impossible to beat.
Impossible. But he gets in that rally mode, and he's got to throw the red meat out there. And then we step back, and we're like, oh, God, I don't know. I don't feel good about that.
Well, I will tell you, if there's any way to manufacture an October surprise, I really think if Trump went on Rogan's show,
Yeah.
because he's not going to put up with the crazy, and there's no crowd to get Trump all riled up,
Right.
right? It's just him and Joe,
Yep.
and Jamie. And I think if he actually did that, it would be obviously the most watched show that Joe's ever had.
Sure.
But it would be, you would see that side, the manager side of Trump, not the TV guy.
I mean, we're essentially down to they're fighting for tens of thousands of votes.
Yeah, you're absolutely right.
It's not millions. That's all
No,
done.
that's
We're
all
down
done.
to tens of thousands. When you look back, you can see Wisconsin was lost by 15,000. Michigan was lost by 20,000 here. So we're really pushing for about 60 to 70,000 votes in that upper Midwest. The problem is the president is on defense. And how I know this is because he had to go to Georgia over the weekend.
Yes.
right?
Yes.
And he's been doing lots and lots and lots of rallies in Florida. And you would think that he wouldn't have to defend Florida. That should be easy for him. So he's defending Florida. He's pushing in. And he's in Arizona today, which, again, voted once for Clinton. That was it. I mean, it's the home of Barry Goldwater, for God's sakes. So you've got some.
But then he was in Nevada. He was in Vegas, right? And
I
so
think he's just crashing there. I don't know.
Yeah.
I don't know. Yeah, he was in Vegas. So I don't know why you're in Vegas. He's not going to win Nevada. That's not going to happen. Arizona is definitely in play, but Biden's ahead, right? So then it's about turnout and who registered the most voters. I get all of that, but it still comes down to, I would say, my best uneducated guess is about 150,000 voters.
Yeah, that might even be high.
About in over 6 states.
I mean, it's a teeny tiny margin.
Yep.
I wouldn't. A buddy of mine posted he sent me a link and he said, "Hey man, here's a Google Doc. Me and a whole bunch of our buddies, we start doing the predictions." And so I actually filled mine out last night, and he said he's always got some funny prize for whoever the winner is, but something really cool.
Sure.
So. So in any case, I filled that out last night, really started digging into the data. And, the hardest thing to see is how big is that silent majority, because no one's been able to really capture that. And Tim Pool made a great point in a broadcast I watched yesterday that there are a lot of Republicans that are showing up early, which is kind of unusual for that group. Biden really ought to be ahead of him by 30, 40 points at this point.
Yeah, but only in Michigan, yes.
All right, I think we got to end here, and then we'll pick it up at the other side of the break.
We got 10 more seconds.
Oh, I didn't know we had 10 seconds. He was doing the hand signal.
He gave me 30.
Oh, he gave you the 30?
Yeah,
oh,
now we're down to like 6.
All right.
So, hey, it's Mr.
It's our first day on the radio show.
We'll be back shortly. Check us out, mrtxre.com. Thanks. Hey, welcome back, everyone. Robert here with my partner, Jason Bible, or Mr. Texas Real Estate. This is the Texas Real Estate Radio Network. Again, if you want to get a hold of us, the best way is to text us, 281-401-9008, or check us out on our website, mrtxre.com. MR is in Mr. TX is in Texas. R is in realestate.com. mrtxre.com. You had Brian on last week, right?
Brian was on,
That was good. It's good. So folks are interested in our crowdfund, check us out. And this is Mastermind Week. So we'll get back to politics a little bit here, but this is Mastermind Week. Tonight we do the property hunt. Tomorrow we're talking about funding, and we're going to talk about raising private money, and then we're going to talk about adding on, especially the secret little garage apartment deal, which everyone should be taking advantage of. And then Friday barbecue, and Saturday full mastermind
day.
So that's a lot.
Yeah, there'll be a lot going on. A lot of it's going to be online, though. So
yes.
We don't want to be mixing germs with you folks.
Not everyone, yes.
Not everybody.
Well, I'll tell you, Disney, I felt, again, super safe at Disney.
Yeah.
I felt it. Now, what's the reality?
Yeah, who knows? Well, you're outside most of the time.
They have a public service announcement that goes on. If you're not wearing your mask properly, we're going to ask you to leave. And they stopped someone from coming in because he just had the bandana around his face and a little American flag bandana. You can guess what hat he was wearing.
Yeah.
And they're like, you can't come in. Like, we'll give you a mask. You just can't come in with that.
Just wear a stupid mask, man.
It was just, and he was like 60 years old in a little scooter. It's like, oh, God, come on.
Yeah.
So Disney, I felt, I didn't see anyone without a mask. If anyone was violating the mask rule, it was me. I just kept pulling it out because it was just hot. It was like 90-something.
Yeah.
But I realized if I'm going back to Disney, which I am, I'm going to wear paper masks or an N95 because it just the cotton one just gets too
wet. Yeah,
too wet with the humidity down there.
So what's interesting is Florida is basically opened just about everything up.
Pretty much, yep.
And I've been tempted to fly down there, just go to the clubs because the clubs are open again.
Yep.
Although I was chatting with some buddies of mine about Vegas, and we'll talk about Vegas here in a minute. But but Disney said, no, you guys are still wearing the mask. We're still doing the social distancing and all that.
Social distancing on the ground, and there's hand cleaner everywhere.
Yeah. But
can't walk into the restaurant and just look around.
I remember I saw a presentation, got to meet the guy afterwards. He was the risk manager for Disney. And one of the things I'll never forget he said is, nobody dies at Disney.
No.
Like heart attack, whatever. Just it's not like drive-by shootings and stuff, but just like there's so many people there, right?
Yep.
It's like nobody dies at Disney, right? So you've got, whenever this started to come out, my next thought was, oh, they don't want to trace, regardless of what the governor's doing, they don't want that traced back to Disney.
They don't want it coming back to them. Yep.
Yeah.
And they're also on Showcase because it was last week, state of California had sent representatives out to observe how their theme park is working, to report back to Governor Newsom to whether they can open up Disneyland and Universal and all the theme parks in California.
Interesting.
Everyone's on their best behavior.
So this is that's a good point, because you got to remember they're just not in Florida, right? It's like, hey guys, let me show you how we're doing here. Let me fly you guys out. Let me show you how it works, because we're losing $1 billion a minute here.
Yep.
So yeah, that's very interesting. So they'll fly back to, I'm sure, California and have that discussion.
Yeah, so anywhere where you would sit down for 45 minutes with a group of people, that's no longer available. So all the shows are gone.
Yeah.
So you have nothing but to go through these, just march through the attractions and go. The restaurants are, they're soup Nazis. I don't know if you've ever seen the soup Nazi show.
Yeah.
It's like, it's like, did you order it yet? Is your number come up? You're not allowed in. I'm like, I just want to see what it looks like. They're like, no. I'm like, okay, all right.
No lunch for you.
No lunch for you, yeah. So that was, but again, I felt pretty good. Now, Orlando Airport, not so much.
Yeah.
Not so much. And it was, and I felt vindicated in my personal philosophy that it's not race, it's more likely economics. Because there were as many Latinos and blacks and as white without their face mask on, all kind of wearing the same sneakers, all kind of with their pants down below their butts.
Yeah.
It's just like, oh, it's the demographic. It doesn't have that. But man, we went through the numbers, and they don't do a good job. The latest numbers, they say, hey, more white people are dying from corona than other, but there's also 50-something% of the population. So then when you take the percentage of the population, you see that, again, African Americans and Latinos are spiking on this
They're
stuff.
getting crushed.
And I'm sitting across from these three African American dudes, and they're just, they've got their chin diapers on, right?
Yeah.
They're just hanging on their chin. And I felt like saying, man, I don't care what you believe in, but the statistics say that you're going to kill grandma.
Yeah.
Right? That's what you're going to do. Like, you are taking this back to your community. And, again, we hear it's about, economics. It's like, it's kind of, but look at this. And if we don't understand that, if we don't understand that just the statistics, because we don't know, all of it's correlation, right?
Yeah.
But the statistics say, hey, Latinos and African Americans are dying at a higher rate per capita than white people. Mm-hmm. Is it access to health care? Or is there something else?
I'm just going to throw this out there as a wild guess. I would have to do the research, but I'm willing to bet it's true. Mm-hmm. Like I said, but I'm just going to throw this one out there. I'm willing to bet it has a lot to do with the comorbidities.
Yep.
Because a lot of people it was so funny to me about 2 months ago on Facebook, the whole world erupted when they said, well, not very many people actually die of COVID.
Right.
They die of the comorbidities.
Sure.
And I'm like,
don't kill people.
Yeah. And I'm like, well, yeah, AIDS doesn't kill people either.
Right.
Like, it's ammonia. It's some other kind of infection.
Right.
Like, in fact, most cancers don't actually kill people. It's some other thing that kills them.
Yes.
Like, you don't seem to understand. It's like, it's kind of like, well, I didn't put any oil in my car, but my transmission blew up. And I'm like, well, probably because there was this other problem, right, that just made everything else worse. Yeah. So, but again, if there's one thing that this thing has really taught me, is the basic science knowledge in this country is abysmally low. Like, it's been mind-boggling to me. But in any case, so my guess is the minorities are disproportionately impacted because they have more comorbidities. I would love to see that research. If you look at, and just look at the big ones, hypertension.
Sure, absolutely.
Hypertension seems to be a big one.
Absolutely.
And weight is another one. If you just look at those, let's see what it looks like.
So it was interesting getting out there and traveling to see that it's not all Trump people not wearing their masks.
Oh no,
that's the point I was making. It's everyone, and they're usually male and they're usually healthy young men, right?
Yeah.
That's the knuckleheads. And once in a while you get freedom, but it's for the most part it's that in Europe, and you're just like killing grandma.
We did a little no mask this weekend at a couple of places, and I'm sitting there and I'm like, Yeah, for us it doesn't matter.
No.
It doesn't matter.
92% of the deaths associated with COVID-19, 92% are 55 years old or higher.
Yeah.
92%.
Right.
So, again, you're saying about opening up the country. Who's going to open up what? I mean, the old people still aren't going out.
No, they're
right?
not going out. I have been all over this country. I've been to Mexico. I've been to, like I said, all over around here. And it is rare for me to see somebody over the age of 55 at the places we go to. Yep. And they're normally there. It's not like I'm going to some club with a bunch of 20-year-olds, right? It's just they're just not there. At the next segment, we'll talk a little about Vegas because I've got a Vegas trip.
Tomorrow night.
This is our fourth segment, huh?
Yep.
So we'll talk a little about Vegas tomorrow night, but I'll be there again this year, so that'll be a lot of fun. But actually, we got 30 seconds left?
Yep.
Is that right, A-Rock? So a couple of guys I usually go to Vegas with around this time. We go to the big Fortune Builders Conference every year.
Oh, yeah.
And mostly we do is just drive cars and go to clubs. We don't even really go to the conference, but we just make an excuse to go there. A couple of guys were down there last weekend, and I said, well, I heard it's dead, and they were showing me pictures. It's packed.
Of course.
He said it's a ghost town during the week, but on the weekends it's completely packed.
People are tired of this, you know?
Yeah, they're getting real tired of it. So,
anyway, thanks for joining us. We appreciate it. Stay safe. We'll be back tomorrow night.